Hi everyone, welcome to today's webinar. Can you guys see me and see the screen? Chat is disabled again. Okay, let me try and figure this out again. Um, okay, maybe you can try it again. Okay, great. So the chat works. So if you have any questions throughout the webinar, you can pop it in the chat or in the Q&A section. Ooh. So we'll just give a couple more minutes to let more people join our webinar, and then we can begin at about 6:05. So in the meantime, you can grab a couple of drinks or snacks, get yourselves comfortable, and then we'll begin shortly. Hi everyone, we'll just start in a couple more minutes. So if you have any questions, any charts that you want me to go through later on, you can just pop it in the chat as well. I'll be right back. I just need to settle a couple of things. Just give me a couple of minutes.
This screen here. Was it app.infx? Let me just find out.
Okay, we're just sorting out some technical issues. So in the meantime, you can, okay, I see a couple of requests in the chat already. So feel free to add on if you have any other requests.
VIP.infx.
Okay. Okay, we got everything settled. Thank you guys so much for being patient. Okay, let's get started. So firstly, let me just introduce myself. I'm Melanie. Normally, Kaylin will be the one who's presenting for the webinar today. But today she won't be able to make it, so I am standing in for her for today. Okay, so let's get started. As usual, a disclaimer, the information in this webinar should not be considered investment advice, but educational material only. The material is just personal opinion, and any risk tolerance should be considered on your own. IronFX is not responsible for any loss arising from any information contained herein. Okay, now let's just get right into it. Okay. So since I have gold over here, I'm just gonna get started with gold. I think I saw a couple people requesting for gold, so we can start off with that. Okay, let me just clear my chart. You guys can hear me clearly, right? Okay, great. Okay. Okay, so let's start off by looking at our daily chart. Okay, so right off the bat, we can see there's a general uptrend for gold over here. So I'm gonna pull out, I think maybe I can pull out a channel. Okay, yeah. So remember, for a valid channel, you need two, it needs to touch two upper and at least two lower candlesticks. Okay, for it to be valid. Okay, so now let's start looking for our support and resistance levels. So to start off, I'll put my first support over here. First support. Okay, so I put it here because we have a pullback support. So over here you can see price has tested this level a couple of times. It bounced off. I mean, it reversed off this level a few times. and then it crossed this level once. That's why I chose to put it here. It's also pretty near where our current price is. So I'll put it here first, and then we can rearrange it later on if we feel like it. So now I'll put my first resistance here. Again, why? Because price has tested this level a couple of times. You can see it bounced off here twice. It crossed it here, so it's a pullback resistance. But it also reversed off of this level recently. So you can tell this is a key level, first resistance. Okay. Second resistance, I'm just going to put it at this peak here. You could put it here as well, but I prefer here because it's not too far away from where price currently is. Okay. Okay, so now let's pull out some Fibonacci levels to support our support resistance levels. So maybe from here to here. So for Fibonacci retracement, we use these 5 levels: 38.2, 61.8, 23.6, 50%, and 78.6. These are just the levels that we found to work the best for retracement. Okay. Okay, so let me just pull out another Fibonacci expansion. So for an expansion, we use the 100%. I'm just going to show all so that we can see where the levels line up. So when it gets really messy like this, what I like to do is I like to hide the previous levels so that I can see better. So we can see the 61.8 lines up nicely with our first resistance over here. 78.6 lines up nicely with our second resistance as well. So I'm just going to keep those 2 levels. Okay. So now that we have some Fibonacci levels and our support and resistance levels, we can pull out some indicators. So I'm going to start with MACD, because at one glance you can see whether it supports your bullish view. So in this case, because of the ascending trend channel, and we can see that the trend has been generally upwards, so we can say that we have a bullish view. And we can see from here, our MACD supports this view as this area is green. Okay, so now that we've done that, let's pull out Ichimoku. So for Ichimoku, we typically like to just make use of the clouds. Of course, you can go in depth and look more at the other lines for Ichimoku as well. But we make use of the cloud so that it's easier. We can just see at one glance whether it's a bullish or bearish view. So in this case, since price is moving above the Ichimoku cloud, so we have a bullish view on gold. So it supports our bullish bias. Oh, good. Are there any questions so far? Okay, if not, let's move on. Okay, I'm just gonna look at some of the chats. Okay, so for Fibonacci retracement, so we have three different types of Fibonacci retracement. So for the first one, Fibonacci retracement will use, let me just delete this. We'll use 5 different levels. These 5. So what you want to do mostly is try and find levels that match up with your support and resistance levels. So that's the first thing that we do after establishing whether there is an uptrend or a general downtrend, is to find the support and resistance levels. So after doing that, then you find Fibonacci retracement levels because that's the easiest to find. And we make use of these 5 levels to support the support and resistance levels. Okay. Okay, so there are another 2 different types of Fibonacci retracements. Let me see if I can find some of them here. Let me see if I can pull out some examples for you. Okay, my computer is really slow today, so I'm just going to try and find an example over here. So let's start with a Fibonacci extension. So for Fibonacci extension, you want to look for a Nike tick. So if either a Nike tick or like a tick symbol, like a V kind of shape. Maybe this one. Okay, and these make use, so you can see the Nike shape over here, like this. This is upside down. So if it's right side up, it will be like this. So your starting point will be here, ending point here, like how I drew it over here. Starting point and ending point. So you can see over here, price actually bounced off of this 1618 level, 161.8 level. So that's kind of how you make use of Fibonacci levels. So you can kind of expect price to bounce off or reverse off of the levels. So in this case, I would maybe buy once price has crossed the 127 area. So if price was maybe here, I will wait for price to break through the 127.2% level first before going in for a buy at 161.8, because you're not sure whether price will bounce off at 127 or at 161.8. Of course, now that we have the benefit of hindsight, we know that price did actually cross the 127 Fibonacci level, and it bounced off the 161.8 instead. I hope that makes sense. Now, if we're talking about the negatives for Fibonacci retracement, so let me see if I can find something like that. So for Fibonacci extension, which is the negatives for Fibonacci retracement, you want to look for flash symbol. So something like a lightning bolt. Okay, maybe something like this over here. This is a pretty bad example, but maybe like this. You want to find like a zigzag shape. So for negatives, we use negative 27.2 and negative 61.8. Okay, this is a bad example, but yeah. So for expansions, you want to try and find like a flash kind of symbol. So if I see it in the coming charts that we're gonna go through, I'll definitely point it out. But that was kind of like a short intro to the different types of Fibonacci retracements. Okay, so let's quickly move on to our second chart. Okay, let's do EURUSD. So actually, okay, Mamado, I hope I'm pronouncing that right. So actually, for beginners, we have a beginner's guide on the Forex Army. So let me just show you. So this is kind of where I learned some of what I know today as well. So you can go in here, they have tools on how to draw Fibonacci retracement, which is what I was just going through. So it gives you examples as well. So it gives you examples of what you can look out for, like clear market view, unclear market structures. Yeah, so it gives you different examples of what to look out for, how to identify retracements. Yeah. So actually you can go in and you can take a look. So they have definitely more than Fibonacci retracements as well. Yeah, so this is what I was talking about. So this is the zigzag I was talking about earlier, the yellow arrows. Okay. Yeah, I can't make it any bigger, so I hope you guys can see. But yeah, So the yellow arrows, it gives us an 88% Fibonacci extension over here. And then for the green arrow, it's a Fibonacci retracement from here, the starting point here, and the ending point here. And then there's another Fibonacci extension. You can see the flash sign, 61.8% Fibonacci extension. So the point of this image is to give you an example of what a really strong support level looks like. So it's strong because all of these Fibonacci levels line up in one area, and we call it a confluence area. So this area kind of indicates that there could be a price reversal at this level. So when you're trading, you want to try and look for something like this level because it's quite a strong level. So you can see price ultimately reversed off of this level and reversed off. So yeah, for anybody, even if you're not a beginner, I think this is quite useful. It's just the forexarmy.com. Yeah. Okay, so let's continue. Okay. Okay, so can you guys tell me whether you think this is an uptrend or a downtrend? I think it's pretty obvious. Okay, yep. So it's clearly an uptrend. So I'm gonna try and see if I can find any trend lines or trend channels to support this. Maybe daily will look nicer. So if you feel like your charts don't look very nice on an hourly basis, you can actually change the time frames to make it look a little bit nicer. And what I mean by nicer is there's a clearer market structure. Okay. So again, remember when looking for a valid trend channel, you need two it needs to touch the top of two candlesticks as well as the bottom of two candlesticks. Okay. So now that we've established the general trend or any trend lines, trend channels, then we can take a look at support and resistance. Okay, I put my support here. Really quickly, I put it here because this is where price currently is at. So it's the nearest to price. And you can also see that price has reacted off of this level once before. So this is a pullback support, which could be a key level. And we will see later on where we pull out our Fibonacci retracement. Okay, so then I put my second support at this level because you can see price has reacted off this level as well. So it bounced off of this level and it rose back up to the first support. So I was actually wondering whether I could pull it back all the way here. And the reason for that is because when you pull your support back, you can see exactly how many times price has reacted off of that level. So you can see whether the level is considered key level. But in this case, I chose not to because there's too many candlesticks that have um they've kind of surpassed the level. So it's not that valid anymore. So I'll just leave it here. Sorry, my voice is a little bit husky today. There's a flu bug going around. So, yeah. So if you can't hear me clearly, let me know as well and I can repeat myself. Okay, so over here, I put it here because it touches the top of one candlestick as well as the bottom of another. So this makes it an overlap, which is of course better than a support that has only been reacted off once. Okay. Okay. So now let's look for our resistance. So over here on top, I'm making that my second resistance because it is quite a distance from where price currently is. This is my first resistance instead. So for resistance, you want to look for price that has reversed off of the level before. Oh, okay. So I'm putting it here instead because like I said earlier, this is an overlap resistance. So it's a key level. Okay, so now let's pull out some Fibonacci levels to analyze. Okay, there aren't really any levels for this retracement. Okay, for this retracement, 38.2 lines up nicely, so we could keep that. So when you're looking for Fibonacci retracements, you want to make sure that your starting point and ending point is there's a very clear market structure. So in this case, I could either put my Fibonacci retracement here or here. So I'll put it here since it's closer to the 38.2. So let me try another one. So over here, you can see price is moving downwards. So you can see a very nice shape over here. Okay, so I'm gonna get rid of 38.2, 23.6, and then I will keep 50% because you can see the 50% lines up with the 38.2 as well as our second support. So this makes it a very strong confluence area, and price could react off this area again. Okay. So this is the confluence area to make it clearer. So if price breaks through our first support and it drops, there's a high chance that price could bounce off of our second support because of all of the Fibonacci levels that line up together with our second support over here. And we can see actually in the past, price has tested this area multiple times. So it makes it a pretty strong area and a pretty key level, pretty important level. But I'll only go in for this if price actually breaks our first support. Because you can see our first support also lines up with a 61.8% Fibonacci retracement. Okay, so now let's see. Yep, so I will only go in for that trade once it breaks the first support, but otherwise, we will go in for a buy because we can see there is a general trend upwards, and we typically want to follow the general trend of the market. So that's the first thing. Secondly, it also is also moving within our upward trend channel. Okay, and because our first resistance has been tested, where's my pen? Okay, well, it's been tested here and here, this area, this 2 times. So we can actually say that our first resistance is a key level as well. Okay, so now that we have all of the support and resistance levels ready, let's pull out some indicators. So in the back, you can see I have my Ichimoku. Price is moving above the Ichimoku cloud. So I can say that it supports our bullish bias. MACD. Okay, so MACD, you can also see that there is a green area where price currently is at. So it also supports our bullish bias. So I like to use these two indicators because once you pull them out, you can see very clearly immediately whether it supports your bullish bias or not. Okay. What's the best method to decide where to set TP and SL trades? Okay. So actually for this question, it's actually on the Forex Army website as well. So let me show you because they have a really nice diagram here. So for take profit, you want to make sure that you always put it before a big confluence area because you're not sure whether price will actually break through that level. So just in case, you want to make sure that your take profit is slightly below the confluence area so that you don't miss out by 1 or 2 pips, which is a very common thing. Okay, and then for stop loss, it should always be beyond a big Fibonacci confluence. So for here, this is a buy entry. Similarly for a sell entry, if you're wondering, your Fibonacci confluence your stop loss should also be beyond the confluence area. Take profit as well should always be before it. So if it's a sell entry and you swap the take profit and stop loss, your stop loss should be after it, take profit should be before it. The explanation for it is over here, so you can go ahead and take a look if you want. But yeah, so if you have any questions, actually, you can go right on to the Forex Army to take a look, or you can just ask us during these sessions as well. Okay, let's move on to our next chart. Okay, let's do GBP USD. Okay, so we can see price is moving upwards in this case. Let me draw a trend line. Okay, so for valid trend line, just to quickly go through, you want to make sure that it touches 3 points, 3 significant touches on the trend line. So if it's downwards, it would be 3 significant on the down at the top of the trend line, something like this. So 3 touches on the trend line. Okay. Let me see if I can draw a channel. Okay. So because of the trend line as well as the trend channel, we can say that we have a bullish view even before we add in any Fibonacci levels or any support and resistance lines. Okay, so for my first support, I'll put it over here because it's the nearest swing low to it's the nearest swing low to where price currently is. Okay, I would put my first resistance over here because there is a swing high here, but price is currently already touching this level. So the next one would be over here. Okay. So now I'll pull out my Fibonacci levels. Okay, so I can see my 23.6 lines up together with our first support. Okay, I have one big retracement over here. So let's see if it lines up together with any of our support and resistance levels. Okay, so we can see that 38.2 lines up nicely with our 23.6 as well as the first support. So again, I'm going to highlight this area because this could be a potential confluence area. So if price ends up breaking this trend line over here, we can confidently say that price, if it breaks, only if it breaks this trend line, then we can say that price might bounce off of the first support. So why do I say only if it breaks this trend line? Because we can see there is a lot of upward movement in price from our trend line as well as the trend channel. And price has tested all of the points on the trend line many times. So 1, it's coming down, 2, 3, and 4. So it comes down here. Only if it breaks the trend line, then we can say that it might bounce off of the first support. Okay, so now let's pull out some indicators. Okay, so from our Ichimoku cloud, price is moving above the Ichimoku cloud, so we can say that that the Ichimoku cloud supports our bullish bias. Next, MACD. Again, MACD showing us a green area where price is currently at, so it does support our bullish bias as well. So there's a lot of upward pressure over here that supports our bullish bias. Okay. Any questions so far? Okay. Juha by Brent Oil, which is the Brent oil that you're looking for, because there's a lot that's coming up for me. Okay, I'll just quickly go through AUD first. Juha, are you talking about Brent crude oil? Okay. Okay, let's quickly go through this first. So I typically like to use either the 4-hour or daily time frames so that there's less noise. Okay, so we can see that this chart isn't exactly trending like the previous charts were. So in this case, let's see if we can find a trend line or a trend channel. Okay, so I can see that there is a lot of downward pressure because there's a downward trend line over here. And there's also a descending trend channel. Okay, so let's pull out support and resistance levels now. Okay, so this will be my first resistance. First support will be here. Perhaps not here, here instead. So the reason for that is because I can see that if I put it here, it'll cut through a lot of candlesticks. So that's why I left it here instead. Okay. So next I have my second resistance. Second resistance here. So we can see price has definitely tested this level many times before. So it's a key level that we can take note of. Okay. So looking at this, we have a bearish view that price will continue to drop from our first resistance to our first support. Okay, let's pull out some Fibonacci levels now. Okay, so I can see my 1.27 lines up with my first support. So I'm just going to keep that. Okay. Now let's pull out another one. Okay. So for this retracement over here, we can see it lines up, the 61.8 lines up with our second resistance. 38.2 lines up with our first resistance. Okay. So like I said before, this second resistance over here can be considered a key level because price has reversed off of it many times before. So now that it lines up with our 61.8, we can infer that it is quite a strong confluence area. But this again is only if price breaks through our first resistance. Since in this case, our first resistance is also a key area to take note of. Okay, so let's pull out some indicators to see if our bias matches. So let me zoom in. You can see price has actually crossed the Ichimoku cloud. It's past the Ichimoku cloud, so we can say that it is supporting our bearish bias, but just about. So let's pull out another indicator just to be sure. Okay, so we can see MACD doesn't really support our bias as well. So in this case, we can pull out yet another one. I'm going to use RSI. Okay, RSI isn't really telling us much. So you can see in some situations, not all of the indicators will support your analysis. Oop, okay. Okay, so I guess you can kind of see over here that there is a descending trend line where there isn't really a descending trend line over here. So because of this sort of divergence, you can kind of infer that price might continue to drop in the future. So can you guys see the trend line here? Whereas over here, it's kind of the same. Yep. Okay. Okay, let's quickly look at Brent oil now. Okay, we can see that there is a descending trend over here, descending trend line, as well as a descending trend channel. Okay. So support resistance lines, I put it over here and here. So over here, this will be my first resistance, second resistance, and first support. Okay, Fibonacci, you can see at 38.2 lines up nicely. Let's see if there's another one here. Okay, so again, our 50% lines up nicely. So you can see price is likely to continue in our descending trend channel over here. It's likely to continue within the trend channel because firstly of the trend channel as well as the descending trend line. So it gives it that resistance, but also because of the 50% Fibonacci retracement as well as the first resistance. So because it all lines up, so this area over here this blue box over here is quite a area of strong resistance. So it supports our Ichimoku cloud supports our bearish bias. Let's pull out MACD. Okay, MACD does not support. So when you see that your indicators don't actually support, that's fine because there are hundreds of indicators actually. So those that we've selected are just those that are easier for us to tell whether they support our bias or not. So it's always like a 50-50% chance. So the most important thing is to make sure that your support and resistance levels have been identified correctly, as well as the Fibonacci levels. Just try and make sure that you find an area of confluence. Okay, so we can see for RSI, there is a descending trend line here. So it also supports our bearish bias. Okay, it's 7 o'clock. I hope you guys learned something today. Thank you guys so much for tuning in. Just before you guys go, I just wanna talk about the IronFX VIP room. So you can go into ironfx.com, just take a look at the different account types depending on your deposit. And let me just talk about the VIP room as well. So you can actually go in here take a look at all of the different currencies. So maybe, for example, we talked about Brent crude oil. So if you actually every day there is an analysis that's put out by our different investment analysts. I'm also in this VIP room. So you can just go ahead, type in anything you want. You can go ahead and practice some of the Fibonacci levels that we mentioned today over here. So perhaps I just want to choose a Fibonacci retracement from here to here. So I can, hey, hey Desmond, is could you check my analysis? And then so you could just highlight this. You can link it to maybe the 23.6%. And when you send it in, we can see exactly the level that you're talking about, because it highlights, if you can see over here. So we can all check. We can check exactly. Oh, my screen is frozen. Let me try again. Can you guys see now? So sorry about that. Okay. Yeah. So as I was saying, you can input a chat here after you've done your analysis. You can type it in and then highlight your levels so that we can, and then just like tag any of us and we can see exactly what you're talking about. So we can help you out. We can check your analysis for you and we'll reply you as soon as possible. We typically will reply within like 24 hours. So, yeah, so it's a great way for you to practice all of your analysis as well before actually trading. Yep. So, okay, I ran over slightly, but I hope today's webinar was helpful for you guys. Yep, and I'll see you guys next week. Thank you guys so much. Bye. Thank you.